Assalamualaikum warahmatullahi wabarakatuh. Hello, let me introduce myself. My name is Rara Zajang Pradawi with NPM 234120008 from Accounting 23A. Here I want to explain about accounting method business combination. Let's begin. Accounting methods pool of interest method. In the pooling of interest method, each party will pool its business interests so that no reassessment of the assets and liabilities of the merged entity is required. The basis of recording is the book value of the merged entity. PSAK 38 Business combination of entities under Common Control Acquisition Purchase Method. In this method, the basis of recording is the fair value at the acquisition date, because the business combination is considered as the formation of a new entity, so the valuation of the net assets of the merged entity is carried out. PSAK 22 Business combinations. According to PSAK 65, an investor controls an investee when: first, the investor has power over the investee; second, the investor is exposed to or has rights to variable returns from its involvement with the investee; third, the investor has the ability to influence those returns through its power over the investee. Business combination accounting 1. Asset liability recognition and measurement 2. Transaction cost 3. Transferred consideration 4. Goodwill 5. Recording of business combination transactions 6. Discounted purchases 7. Phased acquisition 8. Business combination without transfer of consideration. Asset liability recognition and measurement 1. Acquisitions are made of assets and liabilities that may also generate goodwill. If the acquisition is not made in full, the unacquired portion is referred to as non-controlling interest. Point 2. The acquirer recognizes separately goodwill, identifiable assets acquired, liabilities assumed, and non-controlling interests of the acquiree. Point 3. The acquirer measures the identifiable assets acquired and liabilities assumed at fair value at the acquisition date. Business combination transaction costs. The costs required in a business combination transaction include finder's fees, advisory, legal, accounting, valuation, other professional or consultant fees, general administrative costs and registration fees, debt and equity securities issuance costs. Transferred rewards 1. The consideration transferred in a business combination may be cash, other non-cash assets, debt securities or equity securities issued by the acquirer. Point 2. The consideration transferred in a business combination is measured at fair value, which is calculated as the sum of the acquisition date fair values of all assets transferred by the acquirer. Point 3. If the consideration transferred is cash, its fair value is equal to its nominal value. Point 4. If the consideration transferred is other than cash, then the consequence must be measured at fair value. PSAK 68. Goodwill. Goodwill is an asset that is classified as an intangible asset. Goodwill will be recognized by the acquiring entity. Goodwill will occur if the acquisition price of the acquired entity is higher than the fair value of the acquired entity. When goodwill occurs, the acquirer buys at a price higher than the fair value of the acquired entity. Formula: goodwill equals consideration transferred plus previously held interest plus controlling interest, identifiable assets acquired and liabilities assumed. Thank you very much for your nice attention, and finally I say wassalamu alaikum warahmatullahi wabarakatuh.